All right. So we're recording. What's the date? It's live, June 16th, 2015 FOMC meeting this week. Covered that in the trading room. But, keep your powder dry. Right now, it's an untradeable market. This morning was good, but right now, in the last half hour, it's untradeable. It's a perfect time for these meetings. That's why we do it around 11 o'clock Central. But FOMC, keep your powder dry for tomorrow, 1 o'clock. Could be a dud and in line with expectations. Don't force anything, or could be an outlier. They could telegraph that at the next meeting they're going to raise rates, and that could be pretty bearish, especially if they're not pricing that in through the balance of today or through in the first half of tomorrow. So that's important to kind of keep aware of. This group coaching session is on the DOME platform exercises. When I started, and when guys I know that have traded for a long time started, front end was the name for DOME. DOME is really DOM, and it stands for depth of market. Platform and front end was the words and the terms we used for what you use to execute on. And there weren't dozens of them around like there is now. And there were two that we used, one of which I put out of business because something got screwed up. And I don't want to say I put it out of business, but we stopped as a firm using that carrier or that vendor because something got screwed up on a trade on the back end, and it happened to be me. And the company covered the losses. I think they covered the losses, but as a company, we stopped using them. Either way, there weren't dozens and dozens of options like there are today, because this was 15 years ago. But when they came up with a ladder, one of these days I'll show you a recording of me trading on an order book before the ladder came out. When they came up with a ladder, it became the best and most popular way to view a market. And even people who like to trade on a chart, I think they should have domes up, should have price ladders up. But there's two, I think it's static and non-static. I don't even know the definition, or all I know is the one you shouldn't be using and the one you should. I'll show you the one you should be using, and that is the way it moves. The other way is they do it that way to avoid patent infringements. Makes it more difficult to read the market. So the functionality of most domes, the way I'm going to walk you through this session, are super similar. They really are. For many of the domes that you guys said that you use. But the way to view and stay on top of what's going on in the market is also what's going to be important about this session. So it's not just how to execute, but exercises to get better at it. Remember, this has nothing to do with the style or time frame you're going to trade. Don't look at any of these exercises I'm going to suggest and say, well, that's good for scalpers. It's good for everyone. Everyone at some point has to get in. If you just want to lay bids and offers in the book for your strategy, fine. But why not have a little bit more of a skill to enter when it's time to enter without just resting a bid or resting an offer? And that's what this is about, the creation of a skill. So this is going to be, I think, a great session for people. I'll underscore this like I've done with some of the other exercises that we've put out. If you worked for me and you weren't proficient at this after doing the exercises, you wouldn't work for me. You'd get fired. If I'm backing a guy and he couldn't be a master at his dome, he wouldn't be backed by me. That's how strongly I feel about these exercises, or else it'd be just a waste of time to do it. All right, so let's kind of get rolling here. I'm going to do a couple things. I'm going to show it to you on this Prezi, some of the things I put together. And then we're going to go to some live domes and actually do it. Now, there's two things you're going to do in trading. You're going to buy or you're going to sell, right? Pretty simple. There's two ways to buy like you see in the edge course. A market order, which means lift the offer, or simply a limit order, which means rest the bid. These are the two ways you're going to buy. There's two ways you're going to sell. You're going to hit the bid, that's a market order. You're going to rest an offer, that's a limit order. Simple. Now, on a dome, and I got an image of it, it's kind of small. Remember, this is right there, the price and how much is bid at that price. Let me zoom in for you older gentlemen. So this is the price, and in blue is how many contracts are bid at that price, correct? Let's go back. This is how many contracts are offered and at what price they're offered at. Let's zoom in. I'm going to do this on a real dome in a few slides, but for now, it's really important to understand. It might be tough for me to go back and forth with this pen, but it might not. Let's see. So, if yellow's not a good color, let's go to black. So, if you did your dome exercise at this market, this image, 1590.75 bid at 1591 even. There's 599 contracts on the bid, 751 offered. Similar image to what you guys have seen in the past. With everything else being equal, this market should go down because there's less on the bid than the offer. In just the scientific way to say it. There's less on the bid than the offer. It should go down. Don't use that as part of your skill, though. When the numbers are this close. If I want to buy it because right now it just came across the wire that Greece and the IMF and the European Union reached a deal, you think I'm going to bid it down here or bid it at the best bid? Heck no. Who would do that? You're not going to get filled. You just reach and buy the darn thing at the best offer. That's called lifting the offer. That's a market order. You're going to click to buy it. You want to get long and you don't want to wait, because if you wait, you'll miss it. It's a big event, and you have to be anxious. You do it with market orders. In this case, it's a real bullish event. You react by lifting the offer. I'll show you how to do that in a second. If it's a real bearish event, or it's just a bearish opportunity and a momentum downside type trade, you hit the bid. You go over here and you click and hit these 90.75s because that's the best bid. You don't play games. You want to rest an offer? Fine. But if you don't get filled, don't blame the market. There's nothing wrong with resting offers. Just know that's a patient way to sell it. There's nothing wrong with resting bids. Just know that's a patient way to buy it. Also, just because you put in a market order doesn't mean you're impatient. It just means you want it. If I want the house and I'm worried about another buyer coming in and getting this house, and I have to listen to my wife yell at me for the next 5 years, I'm not going to squabble over $5,000. I'm going to buy it. Where do you want it? 750. I got it. I'll buy it. Whatever the offer is, if we're negotiating, lift it, because you know someone else is going to come in and scoop that, and you just at some point say, I want it, because you don't want to miss it. Buying a house is just like a trade. It doesn't mean it's a bad decision to be aggressive. Sometimes it is, and sometimes it isn't. But just reread that section on 2 ways to buy, 2 ways to sell in the ebook in track 3. 2 ways to buy, 2 ways to sell. That has to be absolute 2 plus 2 equals 4. If it's not, the rest of this session isn't going to be as valuable to you. If it's not 2 plus 2 equals 4, the rest of this session is not going to be as much value as it should be. Plus, you're not ever going to trade successfully. All right, so lift an offer, hit a bid. our market orders. Let me get rid of these drawings a second. We know the best bid and the best offer where they meet is where the market's trading. We know what the size is. Now let's go on to the next. Let's go on to the next slide. You know what? Before we go on to the next slide, all right, let me walk you through. Let's do this. Let me walk you through a couple scenarios, and then I'm going to do it on a couple domes and show you the workstation you should have on at least one of your monitors. So what do I mean by a scenario? Buy 3 right now, offer 1 at a +2, 1 at a +4, 1 at a +6. I don't want you to do that. But if this is this is something that someone in the team room should write up for someone else to do, and you have to practice it. I'll show you how to do that in a second. Then, what does that mean? When you buy 3, you're long 3, right? You're trying to get out for a +2, 4, 6. But you're not guaranteed that. So the next thing you're supposed to do is hit the bid on one of them. Now you're long how many? 2. Try to scratch one. Wait until the best bid is less than 100 and then try to hit it. This might sound confusing to you. I'm going to show you how to do it in a second. Sometimes you could put in automatic legs to get yourself out for +2, 4, 6, and then you could adjust it. And that's a good way to trade. But this is a scenario. Buy 3 right now, offer 1 at a +2, 1 at a +4, 1 at a +6. All right, now you're long 3, and you're waiting. All right, hit 1, or hit the bid and scratch 1. It might not be a scratch, though, so just hit the bid on one of them. You're long 2. Try to scratch 1. Wait till the best bid is less than 100, and then hit the bid. Try to get it. These are things that I would be making a junior trader do that I was training, that I was backing. I'd lay out these scenarios, stand over his shoulders, first show him the functionality of how to bid, how to offer, obviously, right? The functionality of the dome. But all you guys know the functionality of your dome, or you should. Then I'd sit over his shoulder and yell these things out to him. Buy 3. Sell 2. Are you long or short? He'd say, I'm long. How many? 1. And I would just repetitiously go through this and put as much pressure on him as I could to see if he practiced. Let me give you another scenario. This is the last element here of this scenario, and that's puke the last one at the market, right? So you sold 1, hit the bid, probably was a -1. Who cares what it was? You tried to scratch 1, you couldn't, you hit the bid, another -1 or 2. Who cares? And then just sell the last one because you're long, just one contract, right? At the market, which means you're hitting a bid. Here's another scenario. Buy 5, sell 3. Are you long or short? How many? Would you hit a bid or lift an offer to get flat? These are answers you got to have. You buy 3, sell 2. Are you long or short? You're long. How many? 2. You're going to hit a bid or lift an offer to get flat. If you're long 2, you're going to hit a bid to get flat. Because when you hit a bid, you sell it. I don't care if you're an investor. Get used to this language. Speed your mind up. You buy 10, sell 8. What are you, long or short? If you buy 10, sell 8, and buy 3, what are you, long or short? I mean, those things you could run through your head and get good at dealing with pressure. Now, that's a certain kind of mathematical pressure you're not going to have to face yourself with because the platform and the dome is keeping track of all that math. But it gets your mind wrapped around and picked up to deal with pressures so that you handle them better. Buy 3, sell 5, you're long 2. I'm looking for a bid. If I'm long, I'm looking for a bid. Why? Because I'm a seller. I got to find out where the buyers are. If I own a house and I'm a seller, who am I looking for? Am I looking for other homeowners who are selling? Of course not. I'm looking for buyers to pitch my house to them. If this sounds simple, I guarantee you that, well, and we're going to do this. We're going to do this in a future class, a volunteer. I'm going to run you through a test, and you're going to share your screen. It's obviously on sim, right? You wouldn't want to do this with real money because you're going to lose money. You're supposed to. When you're hitting bids and lifting offers, you automatically lose a tick. But this is the way you practice. This is the way you use sim. And in a future session, I'll test a volunteer. And I'll pretend like that volunteer is my broker. And I want to quote, I want to know where the market is, and I want to know what's bid and offered, and I'm going to tell you to do stuff. And it'll bring all these exercises together, and really we'll find out whether or not that particular person practiced. Because this is what I would do to junior traders that were backed. Let's go on to another slide. And another scenario, another example. Sell 6 at the bid. Take a -1 on 2. Try to scratch 2. Puke them all at the market. Now, this one I'm going to come back to. Don't read this stuff yet. Don't read what's on this slide. I'm going to come back to it. We're going to bring in some domes in a second. This is what one of your monitors should look like. It doesn't have to have these exact markets in it. Euro stocks is on the left. S&P minis are on the second from the left. In the middle is the DAX. On the right is the NASDAQ. On the far right is the Dow. You could also take these, depending on your eyesight, and make them smaller. So you could fit a couple more on here. For instance, let me bring this up here a second. You could make certain domes fit, so you could add another one down here. I don't want to tell people exactly how to lay out their workstation or their monitor, but I do want to tell them that they should have multiple domes up on one monitor. This is learning to drive, and this is what the first thing you are looking out into, the windshield, through the windshield. Well, I said that to Carl, who's a pilot, came to a live seminar we did a couple years ago. I said, of all the instruments on the instrument panel, and I never flew a day in my life, never went to pilot school, I guarantee you the most important one is the windshield. See where you're at. It's certainly the most important instrument in a car. And everybody concerns themselves with just staring till their eyes bleed on charts with all kinds of stuff that they can try to manipulate to find direction. And they miss the comparing contrasting element to trading by not looking through the windshield of the world. This tells me, and by the way, I have another monitor with other domes up. This tells me what the European equities are doing here on the left, here in the middle. I got the U.S. equities, NASDAQ, Dow, ES, other domes. I know what the treasuries are doing. Got a couple currencies up. I got another couple markets up. I could just look to see if something quick is happening in there, or if I wanted to trade them, or if there's a spike, I could catch it quicker than having an entire. Now, I have other monitors with charts up, don't get me wrong, but the windshield is going to be the monitor you're looking at the most. It looks like, look at all this information. How am I going to absorb it? Well, if you did the quoting exercises, it would slow down a lot for you. don't worry about all these numbers either. You don't have to analyze every single one of these numbers. That's ridiculous. I think I wrote that in the ebook in track 3. But if you could quote, you'll slow things down for yourself. Now, don't worry about the font size either. A lot of domes allow you to adjust them higher, bigger, smaller, and everything else. Euro stocks, same thing with the ES. There was something wrong on the ES. Remember, this is sim too, by the way. I wouldn't do this in a live environment because you purposely want to lift offers and hit bids to practice, correct? So, for some reason, it's not working with keeping track of the orders in the ES. So I'm going to take a similar market, and that's the Euro stocks you hear me talk about. See the Euro stocks is 52 bid right here and 53 offer, 34.52 bid, 34.53 offer. You see that over here on the left? How much is on the bid? 556. How much is on the offer? About 409. This is a good market if you have access to it to practice because it's a little slower than the ES. It's a little thicker. It just went 53 offer to 53 bid. Did you see that? Now there's one thing to remember on a screen share. What I do is maybe a second delayed. My audio is pretty as if you were sitting in the room. But watching this on the screen share, what I do, you guys see it about a second or two later, okay, from when I say it. So right now I'm bidding. You guys just seen it. Right now I just canceled it, and you guys just seen it. So just keep that in mind as you're watching this on recording or watching it live. All we're trying to do is practice. Right now, do I want to bid or lift an offer? I probably want to bid it. Why? Because there was only like 18 there. I don't want to lift the offer 54. There's 400 there. I got time to buy those. So I'm resting a bid. Canceled the bid. Right now the S&Ps are on their highs. Now there's only 200 up. I don't want to get into this being an order flow exercise. I want an execution exercise. So if the scenario is to, let's just stick to one lots, is to buy it when, let's say, this offer gets below 100, I'd have to buy it right there because it got below 100. Offer at a +2, offer at a +2. Buy another one, I buy another one. Rest a bid for the third one on the best bid. I'm making this scenario up, by the way. Offer, now I'm long how many? Just 2, maybe 3. Pull it. Now I'm only long 2. Offer at a +4. Pull your +4. Scratch one. Offer at a +1. Pull it. Offer at a +8. And you just put it up there. If where you're long from gets below 150, try to hit the bid and scratch this last one. So I would put my arrow right there. Gets below 150, I'll try to hit it. It's 319 right now. It's 270 right now. Remember where I'm at. It's 406 right now. Forget about watching the other markets. I'm doing that, but that's a different exercise. This is just following some scenario laid out. I'm long 1. I have to hit a bid to get out. I could rest an offer to get out. That's what I'm doing up here. I'm waiting for this guy to get below 150, then I'm going to hit it. If it gets below 250, hit it. These scenarios should be laid out. Now that we got the team room, you guys could partner up with someone and have them give you direction. If it gets below 250, I got to hit it. I'm watching it. 260. Oh, I screwed up. I anticipated it going down. It went up. It went from 260 to 270. When I seen it change, I thought it was changing and go lower. So now I got to pull this order because I'm flat, right? Here's my position up in this right-hand corner. Let's do another scenario. Sell 3 at the market. All right, hold on 1 second, guys. So now I'm short 3 from the offer. Why is that good? Because if I want, I could scratch it. I just scratched one. Scratch another one. I do that. Bid for a +2. I'd bid it down there. Pull it. Try to sell another one at the same price. Pull it. Scratch this one. Oh. I offered it, came back. I bought 2. Hold on, I gotta turn my phone off. I'm looking down at my phone at the same time. All right, here's what I want to do. Because I want someone to give me orders and I'll put them in. And I'll do it one lot at a time. I don't have any legs set, so orders go in automatically. You could do that. I don't want to get into that for this session. But right now, I'm going to give Brad, Mike, can I unmute you, Brad? No, it shouldn't be, Drew. All right, good. All right, Brad, how are you? So this is the... All right, take your time.
I have to plug in my other speakers so that we don't get an echo.
All right, I just muted you while you do that. So I've got... This is the Euro stocks. It doesn't matter what market you do it on. Do it on the ES, do it on the Euro stocks first, the ES first, doesn't matter. All right, Brad. You ready?
All right, I'm back. Yes.
All right. I'm just trading one lots, but you could give me positions of multiple contracts. For instance, just don't tell me to buy 6 or 10 or something. Just keep it 1, 2, or 3. And I want you to tell me what to do and be specific.
Okay. Right now, lift the offer. Did you hear me?
Yeah, I did it. If you're watching, I did it.
Did you get filled?
Yeah.
Oh, I don't. Okay. Oh, you don't. It doesn't show your fills. Okay. All
Wait
right.
a second. It should. If you're looking at my screen, it should. It's got this dome right, or I mean this.
Oh,
oval.
I see. I see that. Okay.
That on
Gotcha.
Trader, that shows you you're filled, and upper right it says I'm filled 1. But okay, go ahead. You're looking at the screen share as you're giving me orders, correct? So you see my actions?
Yes.
Perfect.
Yes. Lift the offer on another one.
And remember, guys, it takes about 1.5 seconds for you to see after I do it. Go ahead, Brad. Hurry up. I'm long the offer.
Okay. Lift the offer.
Again, I'm long 3.
Rest an offer at 34.56.
Okay. Maybe it's a couple seconds. You guys see a delay.
Yeah, I think I do.
I'm looking to sell 1 at 56. I'm long 3 from 54. It's 53.54. Talk to me. It's your money.
Scratch one.
I can't scratch one. I'll try to scratch one. Tell me if you want me to hit the bid. It's 53 bid 460, 230 offered at 54. I'm offering 1 at 4, 1 at 3, or 1 at 4 and 1 at 6. ES is quarter half. They just spiked up a little bit in the DAX. That's because it's thin. All right, I'm only long 2. I did scratch 1. I'm long the bid. What do you want me to do?
Scratch one. Scratch the last one. Puke it.
No, puke down. You know, I only got 1. The last one I had 2, so I'm trying to scratch. I did.
I think this delay has affected me just a little bit here.
That's okay. That's all right. It's good.
All right.
This is a good scenario. So now I'm flat.
Now pull that last one. Okay.
All right. Thank you. What do you want to do now? It's 3-4. 6 only offered at 54.
Lift the offer. Okay.
All right, I'm long 1. This segues me right into the advanced level of this practice. I'm long 1. Nothing. I'm working nothing.
Lift it again.
All right, long 2. It's good.
Put
Go
a
ahead.
limit order at 34.56 to sell 1.
Got it. 53 for 500. $1.93 offered at 54. I'm long 2 from 4. It's 84 quarter, 84 half in the ES. We need those to make higher.
Lift the offer.
Again, I'm long 3 from 54.
Long 3.
Got
right.
it. That's good.
Sell. Put another limit to sell 1 at 34.56, so you'll have 2 at 34.56 to sell. You got 1. We don't have.
Got it.
We don't know what we're going to do.
I'm long 3. I'm working 2 at 56. I'm long 3 from 54. There's only 70 left at 54. Just went 54 bid. That's good. What do you want me to do?
Scratch 1. Now we're long 2.
Long 2. It's 53, 55 for size.
Scratch another one.
All right. Long
Scratch
1.
the last one.
All right. So even with the delay, you could see I could follow what Brad is telling me. If you think that is easy, let me give you guys.
That's not easy.
Direction.
Let some other people try because it's not easy to do.
Yeah. Well, it should be. It should get easy.
It's good practice, though. I like doing it.
This is good practice. This is how you practice sim. I'm telling you. So here's the thing. Right now it's 53, 54. 4s are going back and forth. If you want to buy it, are you going to lift 55s? Of course not. Just bid the 54s. You'll probably get them. They're trading. It would be insane to try to buy 55s when the 4s are trading. Just bid them. You'll probably get them. Now you're long the bid, which is good because you could scratch it if you want. Make sense? All right. Now here's where the segue is, and that's that last slide, and it's how to catch a turn. Well, what does that mean? If you're long a bid, I'm going to mute you for a second, Brad. Thanks for your help.
Okay.
I might have you back on. So if you're the whole notion to trading, even if it's not short term, especially if it's short term, but even if it's not short term, is to be long bids and short offers. So if you're long a bid, you could scratch it. If you're short an offer, you could scratch it at that particular moment in time. I would rather be long from 54 than 55, obviously. Makes sense. The job is to get 55s to go bid and 56s to go bid. That's the market moving up, and that's my trade becoming more and more profitable. I want to catch a turn. Let's say I want to catch a turn. I got to sell this thing for whatever reason. I don't want to sell it. The S&Ps are on their highs, as you can see where my cursor is, right? So I'm thinking, all right, but I have to sell it. The coin said sell it. So I'm going to sell it. I got to catch a turn. I want to sell it at 54 and have it go offered as soon as I sell it. This is practice of catching a turn. If I miss it and 73 goes away, this number, then I'm not guaranteed to sell it at 54. I missed it. And when you hear me say I missed it, that's what I mean. So I'm going to try to catch a turn and get this thing sold and have it go offer as soon as I sell it. Now, I don't want to have to sell it now because, and I wouldn't want to sell it now because the ES just went up a couple ticks. So I assume the 55s are going to go from offer to bid, and they did. So I'm like, good, I ain't going to sell 54s. I probably could sell 55s. Now, I didn't sell 55s, but I could have. My whole thing is to catch the 54 in a turn just for practice sake, as an example. If 55s go bid, we'll try to catch that turn. So the ES just went to 85 quarter and then went off 2 ticks. This yellow, remember, is what's trading. Right now, 55 is trading, which means people are buying aggressively 55. I got to be careful. I want to catch this turn. I could care less if it's a winning trade. That's not what this exercise is about. It's about selling it and having it go offer ASAP. I have a scenario set up in my head that's going to get me to sell it. Because right after you sell it, catch the turn, you're to scratch it. You're to sell it and be able to scratch it immediately. Now, I wouldn't want to sell it now. 55's only got 29 left. Make sense? Why the hell would I want to sell 54s? I probably could sell 55s. I'm watching this ES, by the way. DAX is over here. This isn't as hard. I'm not saying trading isn't as hard as you think. This exercise isn't if you practice it. Hey, look at the 55s. They just went bid for like 300. Glad I didn't sell the 54s, right? All right, now I want to catch the turn on the 55s. I want to do what I did at 54, but at 55. There's 200 on the bid, 200 on the offer. Right now they're trading 56. Right now it's 84 quarter, 84 half in the ES. I want to sell 55, but I want to do it and get it to go 55 offer as soon as I can so I can scratch it. Has nothing to do with where I think the market's going. Has nothing to do with bias. It just has to do with catching a turn and that exercise. There's only 100 on the 56 offer. Quarter half here in the ES. The DAX I could see out of the corner of my eye skipping down and then up. And the 56 is traded out and there's only 60 left. It's a good time of day to practice because it's slow. And then as you get good, you're going to want it to go faster. You want to practice when it's faster. This is good for talking through it and getting used to it. Quarter half right now in the ES. And this is how, well, we layer this up and say, how do you catch a momentum trade? This is how you would do it if you thought it was going down. But let's not get into that. Right now I'm looking for the quarters to go off, and I'm going to try to sell these 55s, and I think I can get it to go off, and then I'm going to scratch it. Right now, sixes are going to go bid, and they just did. Sixes went bid because these halves went bid. I still, just for example's sake, want to catch a turn. And then scratch it right away. And I'm just working on the sell side. Once you practice and get good, you could just practice catching turns both ways. 84 halves go bid small in the ES. You got to be good at quoting, or at least decent at it, in order to understand and read other markets. It's 290 on the bid. There's 270 on the offer right now in the Euro stocks. Right now, I really don't have to worry much about hitting 55 because there's 289 there, number one, and number two, these 184 half bid. When they're 84 half offer and if these quarters trade, then I got to worry about getting ready to sell this thing. My mouse is over where I want to click. I'm looking, all I'm doing is to catch a turn. I'm not bearish or anything else. I'm just trying to catch a turn. And this is an exercise that is kind of in the second or third phase of this entire session. It's kind of good that I had slow and then kind of bad because I want to get something happening here. See, if I sold it, let me pretend I don't think it's going to turn right now, but let me sell it and say, shoot, now what do I have to do to cover that short? I got to wait and wait and wait and wait. So we don't want to do that. That's not the exercise. We want to catch a turn. Right now, I'm going to I missed it. I went to catch the turn up and I missed it because I seen this ES go up. I just want to get people used to catching a turn. Instead of trying to sell it, market's kind of rallying. I missed the turn 56 going up. They might come back and fill me, but I pulled it. There's only 100 and 200 there. Did you see how 56s went from offer to bid when this guy over here went bid? So if I was looking to buy it, I would have caught the turn at that point. Now this market's going up. I'm still going to try to sell 56, but on a turn and try to scratch it. Not yet, though. Not yet. You could use, just for practice sake, a number, like if it gets below 100, hit it and then try to bid it. I'm not necessarily going to use an arbitrary number. I'm going to try to see if the ES could lead this thing from 56 bid to 56 offer. Hey, with everything being equal, there's 240, so I'm going to hit it and I'm going to bid it. I think they could turn. It hasn't turned yet, but I'm short. I want to catch the turn. The reason why I sold it, I seen the 85 even go offer. So I think these 56s should turn and go offer and fill me to scratch it. It hasn't yet. Now it will. Well, it still hasn't. The reason why I said it would for sure is these 84.75s went offer. This is taking too long. I want the turn to happen quicker than this. This is when you hear me in the room saying I'm short. So I was able to scratch it. Enough of them traded, filled me, and I scratched it. What got me to hit it was 85 going offer. What got me comfortable that I was going to be able to buy it back at that price was the 84.75s went offer. And that led this thing down. Now it's back 56 bid for 300, 400 offered at 57. I don't want to keep going at this pace, but you got to get the premise of what catching a turn means. If I were to do that, that's the worst exercise. That's the worst part of trading. You bought 57s and you could have bought 56s. It just waited a half a second because it was trading. You got to know that. That's not the exercise. The exercise is catching turns. If it's moving too slow, catch something else. Right now, 56s are going back and forth. Bid offer, bid offer. It's bid for 260 right now. Right now, the 85 evens went bid offer. You start to tie these skills together. All right. Let's go to, hey, Dave, are you here? You think it's easy? Are you volunteering to get tested? Dave, you mind if I open your mic and you shoot out a couple instructions? All right. All right, Dave, how you doing? All right. Tell me what to do. Eurostocks, it's fit. You see the bid offer. We're doing just one lots at a time. You tell me to sell 3, sell 2, sell 1, buy 5. No, I can't hear you. I hear you, but it's faint.
Oh, let me try that. I was saying offer 1 at 57. That's not going to get filled, though.
That's all right. I'm doing it.
It was looking better when I said it the first time.
That's all right. It doesn't have to get filled. I just want to see how fast. I want to see. I want to get stumped.
You want to get stumped?
I want you to go so fast that I can't follow you.
All right. Scratch that. Sell 3 at 56. Offer 1 at 59, 1 at 61, 1 at 63.
Oh. You got me selling more? You know that, right? Okay, go ahead. 59, 61, 63.
Did we go? Let's see.
You had me sell 3, now I'm offering 3. I'm short 3 from 56.
Okay, so let's cancel those 3 and buy me 1 at 54, 52, 50.
Just, you know what? Just give me the last 2 numbers. You said 52, 54, 50 or something.
So 54.
All right, buy 1. I'm working to buy 54 on 1.
Okay. And buy me 52, 1 at 52, 1 at 50.
Working them.
Okay. Let's try to scratch 1 at 56.
Got it.
Let's try to scratch another one at 56.
Working it. No fill. 86 left.
So cancel the bids at 52 and 50. puke it. All of it.
All right, we lost one on two of them, scratched one. That's good. I mean, it's not even as easy to come up with the instructions on it, but you want the way. If you could write out the scenario, and I don't want you to do this now, but this is how you practice it. Write out a scenario and read it to the guy, so you know you're not thinking as you're going. Because here's the way I'd run out suggestions or instructions: is these guys, it's going to be hard for them to stump me. I guarantee I could stump anybody in this room, and it wouldn't be by, being confused or saying 54, the whole number, or things like that. It's just, I would go super fast, and I would be surprised. I shouldn't say I guarantee I could stump everyone. I'd be surprised if I couldn't. And you want to be able to follow along. The skill then comes in catching the turn, right? So if you could just follow along, and I don't think it's particularly hard. If it is hard, it should be, that's where you need the practice to make it easier. But then get up to catching the turn of, all right, I want to sell this thing when 56s go from bid to offer. And if you do it now, man, it might be too early because there's 180 there left and it's taking too long to go. You'll know you're getting good at catching the turn when right after you sell it, it goes from bid to offer and you're able to buy it back. Now if I have to go to the market to buy it back, I'm losing a tick on it. For instance, if you had your chamber loaded just for one, and I said, all right, buy 3 at 57, sell 1. You can't think about where you're selling 1. Sell 1 means sell it. Go to the best bid. Buy 3 at 57, you're long 3, sell 1, you sold 1 at 56. Offer 1 at 58. Pull it. Sell 1. You long or short. The guy's got to say I'm long 1. All right. And I wait, and then you come in with instructions. I mean, I know guys would get stumped because guys on the floor got stumped when orders would come in on the phone from the desk, and the guy would wave for a market, and he knew what the market was. They'd get flustered. As a clerk, I'd get flustered, and brokers would get flustered, and this is what we did for a living. At times, you get flustered a lot, but it would happen. If you had a real jerk that said, buy 50, pull it. Work 50 again. Shave 25. Do I got any fills? Yeah, you got a total of 10. I only want 15 all day. All right, you're filled on 20. Well, sell 5. All right, pull that. How many do I got? 15. All right, fine. And I mean, that could go on, and you could have a real needy and jerk of a guy giving you orders. And that's what you want to create in these exercises. Have a jerk of a partner trying to stump you. But obviously being clear and concise as to what they want. You don't want to try to stump someone by saying, I want you to buy 1 from 2083 3/4. No. Say, you know what? Bid 83 3/4 for 1, or buy 1 from 83 3/4. Cut off the handle. Right now it's 56, 57 in the Euro stocks. It's not 34, 56, 34, 57. It's 56, 57. And then you know what? It's really 6, 7 once you get rolling. It's 6 bid, 7 offer. Pay 7 for 1, right? If I pay 7 for 1, that's what I'm doing. I'm long 1. Where's the market? 6 bid, $1.50, 200 at 7. And that's what a guy's doing. So not only do you give them instructions of what to do, but you ask them for where the market is. I would test someone by giving them instructions on order entry and have them tell me where the market is at the same time, pretending like I can't see it. Right now I'm long 1 from 57. The guy would say, well, how much is there? It's like 140 left. Where are the S&Ps? 85 half, 85 3/4. Where's their high? 86 even. How many are on the 56 bid? 200. 200 by 140. Where's the high in the Euro stocks? It's 66. Where the F is the DAX, 59.60? And the guy might swear a couple more times and say, why can't we get these things to go up? Why does he want them to go up? The guy's long. Try to scratch this damn thing, and you're trying to scratch it like that. How many are left? 165. How much are on the bid? 196. If the S&Ps go 85 half off, or try to hit the 56s in the Euro stocks. You see all the things you could do to train yourself with cause and effect? If these 85 halves go from bid to offer, I'm to sell the 56, unless I'm already filled at 57. Does that make sense? If you miss it, you miss it. If the 85 halves go from bid to offer, you're to sell one at 56. And if the 85 75s go from offer to bid, you're to pull this one. Let's see what happens for, I already got filled. Let's buy it again. I'm to pull this one if the 575s go bid, or I'm to sell this one if the 5 halves go from bid to offer. Even if I miss it. See, 5 halves go offer, I hit it. I'll pull that one. That's a good exercise. Cause and effect. You see how you start to understand and use relationships? What front end do you use? Or a dome, rather. You want to show your screen, and I can run a couple things by you? Or let's do it next week. Take a week to practice. We're going to show your screen, and I'm going to try to stump you. And I hope I can't. That's why I kind of don't want to do it today, because I want to test to make sure your screen shows. I'd give you presenter powers through GoToMeeting, and you'd be able to share your screen. But I want to test it before we play. I don't want to test it in here. But I want to give you a week. You might be able to do it now, but I don't want anybody to say, well, he didn't practice. You got a week to practice. And it's not a win-lose type of thing. I don't win if I don't stump you. I don't want to stump you. I'm just going to give people a good sense on the pressure you want to build for yourself so you don't handle it poorly when it's real pressure. So again, draw up scenarios for yourself, like 5 different things, so you don't know what's coming, and then you read it one at a time. Now, if you got a partner, it's easier because then you don't know what's coming. Have them write up 5 different things in one trade. So the scenario would be lift the offer for 3. You're long. Sell 1 at a +2, 1 at a +4, 1 at a +6. That's step number 2. Step number 3 is hit the bid. Hit the bid again. You're long 1. Pull the 2 orders. And then the last one might be try to scratch it, or whatever it is, you watch it and do it. And then you'll get better at just telling this guy what to do to try to stump him. And this is now becomes practice. Bid to offer. It'll also help you quoting, because you'll understand offers going bid, bid going offer, the value of that when it happens in other markets. How the heck are you going to see all of this unless it's on one screen? To know what the DAX is doing, then you refer to a chart. Here's one of the charts I show you guys, right, in the trading room. And say, you don't have to pull this over and always look at it, but you just glance and say, well, Here's the swing highs right above 61. There's a couple more about 62, 63. Here's the high they'd have to go after. This is kind of a sloppy chop, but if they can get above 61, they could go to the high, which is 76.5. And now you compare that with what you're seeing on the dome. Here's those 61s right up in here. And guess what? There might be a big offer that the shorts are leaning on. You see how things are now tying together? You see a place on the chart where there might be buy stops above, and then on the dome you see a big offer there. When that offer goes, bam, the lid comes off. So if there's a question, am I watching domes for market correlation? That's where I get my first immediate correlation. It's a good question. That's my first sense of what happens. That's where I probably see it first. And then I use the charts as references. Right here, Eurostoxx, 55 bid, 56 offer, 350 by 240. With all things being equal, it should go up because there's less on the offer. So I bought it. Now I try to scratch it. Now that's not good at catching the turn. There was too much there. So now I'm long one trying to scratch it. But I got my arrow over the bid to try to take a -1 if this bid starts to go. Make sense? This bid's going to start to go for sure if this bid in the ES starts to go. If this starts to trickle lower. Then I got to be worried about this bid right here. I really got to be worried about it because there's only $1.50 there, $1.32 there. I'm like, ah, boy, 483 where I'm trying to sell it, only 140 where I'm hoping not to have to sell it, right? I'm still leaning on, I'm still waiting, trying to hold on. 55 offer in the DAX. Up, I hit it, got it, because it went. So I got my -1. I had a feeling 55s were going to go offer, and they did. Why? Because this guy was leaking lower a little bit. Your predictive skills will go up. Your ability to see why correlations matter will go up when you're viewing one screen to have multiple domes up. Don't try to watch 5 domes at once, just 2 or 3 at a time. Use this Eurostoxx DAX ES correlation. You'll like it. Practice with these scenarios and these exercises. You'll like it. Get a partner with the team room. It makes it more possible to practice this. You don't have to do it every day, all day. You don't even have to do it once a week. Just do it a few times in your life, and you'll get better at it. And know this, that if you traded my money, you'd probably have to go through 15, 20 minutes, 30 minutes of me peppering stuff with you and not making a mistake before I let you trade it. Zane, I don't even know. Static and non-static is I don't even get in. Don't watch it any other way than this way. And I don't even know the static definition, which one this is. Which one is this, static or non-static? What would this be considered? All that static talk is for patent infringements. Watch it like this, where the price moves with the size. It's not challenging though. All right? It's quite challenging, someone says, watching footprints, charts, domes at the same time. It's only challenging when you don't know what to look for and look how to do it. It's quite challenging to fly an airplane too, isn't it? It's quite challenging to drive a car before you learn to do it, wasn't it? But if you learn the right way from the right people, practice the right skills, anything is possible. You won't learn how to do this unless you practice it, period. If you think it's boring or you know how to do it, then volunteer and I'll test you. Not now. I got to test the screen share and stuff to make sure it works, and I don't want to get into that. And I want to give everybody time to say, I'm good, I practiced it. And if you want to challenge me to it again with some things written down next week, I'm open for it. And if you stump me, I don't care. But I could tell you what's going on in all these markets. I could quote all these. Well, it's easy to quote all these markets now because it's not moving fast. But I know what all these markets are doing. And you got to be a machine, but you got to train yourself to be one. So I'm going to stop the recording right now, but I do want to, let me add this slide here real quick. So trying to catch a turn is, for instance, lift an offer and try to see if you can do it right before it goes bid. The opposite is hitting a bid right before it goes offer. Here's another one. Hit a bid right when it gets to just under 100 and see if it goes offer real quick. Obviously, this 100 doesn't pertain to the DAX or some other markets that their size are smaller. But for the ES and Eurostoxx, 100's a good number to play. Work on scratching trades right away, soon after you did the above. That's the success of the exercise, right? The success of shooting free throws is the ball going in the basket 9 out of 10 times. The success of this is quickly being able to scratch trades. It's not necessarily how you're going to trade your strategy. It's just going to get you to not only execute and become a master of your dome, but become a master of market awareness of multiple markets. I'm going to stop the recording now, get into some questions, and then we'll wrap things up. I actually leave the recording going with some questions. Go ahead if you guys got questions. I recommend people have no less than 3 monitors. Number one, a good trading monitor. I mean, I have Dells. They're, flat screen monitors are pretty cheap now, $200 to $300 for a 24-inch. I recommend you're going to invest in a monitor, get no smaller than 24. Number one. Number two, yeah, you can get real cheap monitors off brand. Maybe they're good, but sometimes you get what you pay for. I've had good success on Dell computers and Dell monitors, so I can only speak from experience. It's all I've ever traded on, and pretty much all the monitors that we had were all Dells. But 24 inches the size, and you got to have 3. I think you need three monitors and up. So real quick, what does it mean to pull it? Means cancel. Pulling an order means canceling an order. Puking it, and this is from someone that's not in the room, and that's fine. Puking it is slang for exiting the position. And usually it's because it's a loser. So you use the word puke. So someone's asking me they had good success trading a long up down bar, and they would sell it back to like a thin spot. Don't get too scientific with what exactly you're going to look for. But what you wrote in here is good. So what they said was their entry points were at the thin spots of a strong move up. They waited for a rotation down, and as soon as I saw something like 17 times 0, potential bottom of rotation up at a thin spot, I hit the offer at the next bid. You hit the bid, probably, is what you mean to say. You hit the best bid. And yes, that's fine. I'm not that technical where I need to see something like 17 times 0 on the footprint or anything. Once you get good at these exercises, you'll know that time to hit it. Could be another mark. See, what the long up bar does is start to give you a probability of a bias. You can mechanicalize it as much or as little as you want, but you're the one that has to do the mechanics of that system, not someone else. If you want to do it discretionary, you could wait for it to pull back and use an ancillary to hit a bid, or you just want to offer it a certain price you like. That'll become easier and easier as you go through those exercises, though. When I say buy it or sell it, that's a market order. So if I were to give someone instructions and I said buy it, I would assume he's going to go to the market. That's what I want him to do. Buy it. Sell it. I don't want him to buy it, 3 ticks lower. I tell him where to buy it. So it should be an assumption. If you tell someone buy 3, that means go to the market, lift the offer, and buy 3. Because if you don't, the guy's going to say, am I filled? And you'll be like, well, no, I'm working the bid. And he's going to yell at you, and he's going to call you names, and he's going to say, I told you to buy it. And now you go to buy what he could have bought, but because you waited, he missed it. You can imagine how the conversation is going to turn at that point. So a couple things what we'll do next week. We'll have George talk about the 2 P&F bar, and then someone's up for the challenge. Make sure you're here next week, and we'll give I'll give a run for his money. This is only if you guys like this webinar, it's only helpful if you do the stuff. I'm telling you right now. And you don't have to do it, but you wouldn't be working for me if you didn't. And that's how serious this stuff is. So have a good week. Get into those team rooms. Use them the way we're talking about. Like I said, hold on. Before I get into that, let me stop the recording and bring this to a close, this week's class to a close.